Africa, the governing ANC has tightened its rules and guidelines to select candidates to represent the party ahead of the 2026 local government elections. This was announced by the party's electoral committee at a media briefing at the ANC's headquarters in Johannesburg today. The party says the revised rules are aimed at improving the capacity of its councillors to provide strategic direction and oversight to municipalities. Amongst the selection criteria is that candidates must possess a matric certificate and or have the capacity or experience to make a constructive contribution within the municipal council. ANC electoral chairperson is Kgalema Motlanthe.
The minimum qualification is now mandatory, and also that the mayoral candidates for the metros and the secondary cities shall be handled by the national officials. This is to ensure that they select people who bring expertise and the requisite qualifications to occupy those positions.
Gunmen have attacked a government boarding school in Nigeria's Kebbi state, killing the vice principal and abducting an unspecified number of female students. The assailants, armed with rifles and reportedly using coordinated tactics, stormed the government girls' comprehensive secondary school in Magat town at around 1 a.m. local time. Vice Principal Hassan Yakubu Makuku was shot dead while resisting the attackers, and a security guard sustained injuries. The gunmen fled towards the neighbouring state of Zamfara. With the abducted students, no group has claimed responsibility for the attack. The former Prime Minister of Bangladesh, Sheikh Hasina, has dismissed the judgment to sentence her to death as politically motivated and called the use of the death penalty distasteful. A special tribunal found she was responsible for ordering a violent crackdown on student-led protests last year. More than 1,000 people were killed during the protests that toppled her government. Hasina is currently in exile in India. The BBC's Arunde Makraji is outside the court in Dhaka.
Where I'm standing, I've been seeing a small group of people erupt in joy and sort of chant, sloganeering, saying, "We demand that Sheikh Hasina be hanged." There are also sort of chants in support of the verdict that I can hear just outside the court premises, very loud chants, in fact, as soon as the verdict came out. So it has certainly been an emotive trial, and the verdict equally eliciting those kind of emotions as I can pick up here on the ground.
For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa News, I'm Jolani Tulo Wepe.
SABC News. The African Perspective. Business, trade, and investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.
It is a very good afternoon to you, Kenya. Good afternoon, Senegal. Good afternoon, Eritrea, Zimbabwe, Egypt. Good afternoon to you, Côte d'Ivoire. Good afternoon, Africa. Welcome to the Monday edition of Africa in Business. I'm Thami Ngubeni. On our radar this afternoon, it is officially the countdown to the G20, which happens this weekend, 22nd, 23rd, in Nasrec, Johannesburg, South Africa. We'll be keeping you updated on developments there. Also, the citrus industry in South Africa breathing a sigh of relief as Donald Trump institutes an exemption for oranges coming out of South Africa. This then enables the citrus industry to remain competitive in the United States market. That and a whole lot more coming up on your Monday edition of Africa in Business. It's gone exactly 7 minutes after 4.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon across the continent. A silent emergency is tightening its grip. Governments are spending more on servicing debt than on health or education. Climate shocks are destroying growth before it can even take root. And a global financial system built decades ago continues to shape the fate and the future of more than 1 billion people on the African continent. At a recent media briefing that sought to advance solutions to the debt crisis ahead of the G20 Leaders Summit in Johannesburg, the picture that emerged was clear. The continent is trapped in a debt architecture that punishes development. Dimakatso Leshuru has the details.
Not only does debt take away from development on the continent, it also locks countries out of opportunity and amplifies every crisis from climate to social unrest. Ahead of the G20 summit, conversations have ranged from the cost of capital to the collapse of public services, from the failures of credit rating agencies to the urgent need for climate-resilient growth, and from global rules that disadvantage Africa to the voices of frustrated citizens who feel increasingly betrayed by their states. It was in this broader context of economic pressure, political tension, and a global financing system in urgent need of overhaul that former South African Finance Minister, who also heads up the G20 Africa Expert Panel, Trevor Manuel, along with UN and IMF experts and leaders from across the continent, held a media briefing to talk to journalists about their diagnosis of what has gone wrong and what must be fixed. These leaders are sounding the alarm over a rapidly worsening debt crisis, now consuming around 17% of government revenue across the African continent. Manuel has warned that the system governing global lending is pushing African countries towards social and economic breaking points. He says this design of the global financial system, especially the role of ratings agencies, is driving up the cost of borrowing for African economies.
The issue of debt this year is so extensively analyzed. It's quite important that we find solutions and not just tinker at the margins, amongst other issues. Quite important is the way in which cost of capital is raised, and one of the key metrics there would be the role of the ratings agencies. And you have to ask about the structure of ratings and how that feeds into the cost of capital.
Manuel lays a central problem. Africa's debt is not only rising, it is increasingly shaped by a global financial architecture that works against developing countries.
An IFC infrastructure lending in Africa, where there's been zero default, earns about 5.8 times what it would on the S&P 500. So it's not just lenders out there, it's the Bretton Woods institutions themselves that actually make a pretty killing of the African continent, even when the risk of default is zero.
If the financial mechanics sound abstract, Jason Braganza, a Kenyan economist, another member of the panel, brought the human cost sharply into focus. Braganza says this isn't just an accounting problem, but a social time bomb. As services collapse, trust in government erodes and unrest grows.
There is a default on development and a default on social spending. We are seeing close to half the continent beginning to allocate close to more than half of their budgets and half of their revenues towards debt interest service repayments. And what this means is, whilst in the immediate term creditors remain happy, in the medium to long term there is likely to be a significant regression in health outcomes, in education outcomes, and then at a macro level, the economic and transformative outcomes for the continent. We are likely to start seeing an increase in social unrest, social discohesion and disenfranchisement between citizen and the state.
Dr. Vera Songwe, a finance expert in Cameroon, says a key ingredient in dealing with debt is economic growth.
I don't think that we do enough for growth. I think the easiest way out of debt is grow. And we do need to also begin to talk a little bit about that. And that's one of the things that we do and would like to maybe emphasize on. It's really the growth framework of the IMF is the debt sustainability analysis, which essentially allows for countries to know what is their fiscal space and how they can grow.
But growth requires competent, principled governance, she says.
Of course, at the end of the day, we need domestic policy, we need principled leadership, and we need clarity in the domestic side, because, again, debt is the contraction of obligations that maybe do not necessarily pay out the return that is needed, either because the resources were not well spent or the initial project was not well designed.
Returning to the ratings agencies, the debate rages, should Africa build its own or force global agencies to be more transparent? Manuel has a different view.
The concern I have is whether a rating agency that is unknown can persuade the issuers. That I think is a big challenge, and that is why I'm avowedly committed to ensuring that we can drive up the transparency and compel that big three to respond differently to the issues. This impacts on the quality of life of people in the developing world every single day. And I think it's a challenge of leadership. Can we take them on and not walk away from their responsibility?
Across the panel, one message is repeated: Africa needs a fairer rule-based system. For Channel Africa News, I'm Dimakazo Leshoro in Johannesburg.
It has gone exactly 14 minutes after 4 p.m. Central African time as we turn our attention now to relations between South Africa and Nigeria. The Chief Executive Officer of the Nigerian South African Chamber of Commerce, Diana Games, says the chamber has been instrumental in helping businesses from both countries expand seamlessly into new markets. She made the remarks as the chamber celebrated its 20th anniversary with a special cocktail forum in Johannesburg, South Africa. Channel Africa's economics reporter, Innocent Simosa, has more.
The event brought together key partners and industry leaders, including representatives from Standard Bank, Access Bank, the Nigerian High Commission, South Africa's Department of Trade, Industry and Competition, board members of the chamber, to reflect on trade relations between the two countries. Tamsin Fremantle is the president of South Africa-Nigeria Business Chamber.
How a chamber like ours, the South African-Nigeria Business Chamber, can actually facilitate these kind of conversations and what value they add is that we bring together government on both sides, but we also bring together very key private sector players who can talk in an environment that is provided for them to be enabling. But they have access to the entire network and ecosystem. And the value of any chamber is its members and the ecosystem and the way that it can work with government to make sure that the business environment is the best that it can be.
The chamber CEO, Diana Games, highlights some of its biggest achievements over the past 12 years.
I think our biggest achievement actually over the years has been creating a safe space for competitors, for Africans from other countries, for Nigerians to come and be in a space where professionalism and information, insights, all of those things are really well appreciated. And we've created a big network of people, both South Africans, Nigerians and others over the years, who have really supported us and come to events, got to know each other, forged their own networks, etc. So I'd say that kind of networking has been a big part of our achievement over the years.
But which sectors should the chamber focus on next for growth? Senior corporate investment banker, Rand Merchant Bank, Suresh Chaitu, had this to say.
We have a presence in Nigeria, in the financial services sector, and we have about $2 billion invested in Nigeria. I think some of the key sectors that we should be focusing on for both Nigeria and South Africa, number one is obviously the major technological innovation and digitization of our businesses, not only in the financial services sector, but if you look at all areas of healthcare, in education, in infrastructure, all of those I think will require massive amounts of technology spend as we're starting to sort of see new innovation and technology coming through. I think the second key area of investment is going to be infrastructure and healthcare. If you look at the development of the healthcare sector with regard to international medical tourism, I think these are really, really important sectors for investment.
With new opportunities emerging across sectors, the Chamber believes the next decade will be crucial in strengthening cross-border partnerships and unlocking broader economic growth. For Channel Africa News, I'm Innocent Samos in Johannesburg.
Gender-based violence is destroying lives and tearing communities apart. It happens in homes, in schools, at workplaces, and too often in silence. But it doesn't have to continue. If you see it, speak out. If you are hurting, reach out. because doing nothing is not an option. Listen to all 19 SABC radio stations from Wednesday 23rd of July for hard talk, discussions, advice, dramas, educational shows, and interviews around GBV with experts, survivors, lawmakers, and the whole country affected by gender-based violence. For all your favorite SABC radio stations, call 0800 428 428 to report abuse or get help. GBV, it ends with you. This message is brought to you by the SABC.
Got something to say? Are you passionate about issues that matter?
Do you have a voice that deserves to be heard?
Well, we've got the perfect platform for you. Call in or drop us a WhatsApp on +27 63 406 9126.
And we will call you back.
So you could have your say and be part of the conversation.
30 years of age. I just turned 30 on the 15th of November. So yeah, that's who I am, you know.
It's not just talk. It's your chance to air your views.
Share your opinion.
Engage with a community that values your perspective.
Follow us on our social media.
Visit our website at www.channelafrica.co.za and get ready
to share your views
on Channel Africa,
the African perspective. Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
It is exactly 19 minutes after 4 p.m. Central African time. Now, the South African citrus industry is breathing a sigh of relief. This is after the United States announced a tariff exemption on South African oranges. The Citrus Growers Association says this move restores the competitiveness in the U.S. market as a key destination that previously saw 4.3 million 15-kilogram cartons shipped in the last season. The citrus exports increased by 22% in the last financial year. For more on this, we joined on the line by Thami Ngubeni, agricultural economist at the National Agricultural Marketing Council. A very good afternoon to you, Thami. Good to have you with us on Africa in Business.
Good afternoon to you, Thami. It's always a pleasure having you on the show.
So what were the main citrus products that attributed to this growth? Could perhaps the 90-day pause on the U.S. tariffs have also contributed to this jump?
Yeah, certainly, Thami. You know, the South African farmers were very much aware of the fact that this season was anticipated to be a very difficult one, specifically because of the tariffs. So the prolonged, in terms of the tariffs themselves being in effect in terms of the products that South Africa exports to the US. So those couple of months gave South African producers quite a some window to make sure that they push as much products to the US market as much as possible. And that was one factor. But another key factor was the fact that the other countries that normally sell their products to the US, the likes of Peru, Chile, and of course the Northern Hemisphere countries, which include the likes of Turkey, Morocco, and so forth, they saw their supply of product, their market ended a little bit earlier, than it was anticipated. And that, of course, it allowed South African exporters to sell because there was a larger demand of both processed citrus products and generally the other juices that even South Africa does sell to the US. And of course, then that opened up a bit of more space. And given that South Africa also had quite a larger, products this year because of the good conditions in terms of the weather. And of course, we had some, stability a little bit in terms of the ports, where there's been reports in recent years of, inefficiencies. So those combinations, Thami, are the ones that kind of assisted South Africa to sell, the current products that we saw selling to the world, including to the US, even though I can tell you that some farmers, they did say that they have reduced the amount of products that they normally will sell to the US this season.
Right. So is this growth sustainable going forward, do you think?
That is a very uncertain, certainty around that time because of the fact that, the situation with the US, it remains quite a very fragile one. I think you are following in terms of what is happening as we are leading to the G20, in the next few days. there have been a lot of statements that have been made between both countries. And now in the business perspective, some of these statements, they don't really help in terms of, giving some stability in terms of sensing, in terms of what will happen in the next few, seasons. But the reality is, for South Africa specifically, and the products that include the likes of citrus, oranges, mandarins, the likes of grapes, which we are getting into the season for it now, and we do sell a lot of that to the US. So, and unfortunately, that product, specifically table grapes, is not part of the products that US recently sort of put in terms of reducing, removing the tariffs because they are seeing some issues in their domestic market. So it's going to remain quite a very interesting period to be able to say we have a stable market or relations between South Africa and the US for now. And that is something that we're always going to be hopeful it is going to settle, sometime, because remember, we also have some negotiations, particularly for some products that, remember we had a delegation that went to the US earlier, but things did not really settle. But then there were second, proposals to that. So it remains quite a fluid situation now. You can hold this direction, but then it spreads to other direction, because even the tariffs you're talking about, we didn't really expect not so long ago, but here we are today.
And on that very note, Thabile, do we know the main factors that led to the United States granting this exemption on oranges specifically?
Yeah. It was bound to happen, Thami. I remember that myself. I did, talk to you some time ago when these tariffs came in, and we did mention the fact that as much as countries will use these tariffs and other trading disruptive measures to try to settle any score, as we have seen with the US trying to bring in this issue of reciprocal trade. The reality is that there is always going to be some unintended consequences. And specifically with the US now, it has been the fact that a lot of their consumers are complaining about a number of products, including the likes of beef, which is part of the products that have been exempted, the citrus, oranges, some cocoa, which includes the issues around chocolate, some bananas, tomatoes, pineapples. It's a whole list, and that list, they saw the fact that their food inflation was kind of increasing, in a manner that a lot of consumers in the US are not really able to afford their food. And that's one thing that you always said from the get-go, that as much as they want this, but it's not really going to help the US, especially the consumers, because some of the products, including our oranges or other citrus, they are counter-seasonal to the US. So meaning when they are ready for the market, the US doesn't have them that time, which is why they've been consistently increasing the amount of the products that they are buying from South Africa.
So what is the likely effect of this tariff exemption on export volumes, specifically in the coming season, the 2026 season, now that the tariff pressure has somewhat eased?
Yeah, so I think for this year season, Thami, is the fact that the bigger crops, that will normally make a lot of revenue generation, specifically from South African producers. It includes, citrus, and that season is over now. And then our key concern for now is going to be table grapes. As I was saying to you, that we are to start the table grapes marketing season, which runs until early next year. And a lot of our grapes, at least not necessarily a lot, but larger quantities of grapes, we do sell to the US. And unfortunately, they are not in part of the products that have been listed to be exempted for the current tariffs. And that's one thing that we feel like is going to probably, affect, or impact the South Africa's, export, at least in a shorter term, as far as this season is concerned, because we're already in November, so we have a few weeks. But generally, the producers, they do get a little bit of what they sell to the US, unfortunately for them. But the general point is that we have pushed a lot of our products that would normally sell, to the US, including macadamia. For macadamia per year, per month, we can export exports worth around 40 million to 50 or even more, depending on how much we have. So we are already in November, and we feel like a lot of those products have already been sold, to the US. But unfortunately, for now, we cannot give very specific numbers or details in terms of how that is going to be. But it's likely that there's going to be a bit of an impact in terms of overall exports to that US market.
We focused on some of the other products that are exempt from the tariffs you've mentioned, bananas, beef, tomatoes, potatoes. But as far as citrus varieties are concerned, apart from oranges, are there any other citrus varieties that also are exempt?
Yeah, so it includes others, limes, but now the tricky is gonna be which products that suffer. Because for instance, mandarins, they have been one of the larger citrus that we will sell to the US, and they are not necessarily part of that. But we are hoping, because as part of also the negotiations we're having, and also what I was telling you in terms of us having a counter seasonally, in terms of the period where the US has domestic production or supplies available, than the period that South Africa will sell the products to. So those are some of the products, but specifically, it is limes when it comes to go to citrus and mandarin, and oranges. That now covers, the citrus, basket of products. But unfortunately, for the likes of mandarins, they're not part of that. But we are hopeful that maybe even if they're not going to be part of it, perhaps from the trade negotiations that the country is trying to engage the US with, probably they will reduce, the tariffs if they cannot necessarily remove them. But for now, as I was saying to you earlier on, the situation remains quite sticky and food for one to say what can really happen. Nobody can really predict, the outcomes of it.
And what's quite positive there is the fact that it doesn't really seem to be a closed door. It seems like, the negotiations are quite fluid and things can change in any moment. Thami Ngubeni, we thank you so much for your commentary this afternoon.
Thanks, Thami.
Thank you. That's Thami Ngubeni, agricultural economist at the National Agricultural Marketing Council. He takes us to exactly 4:30 p.m. Central African time as we head over now to the markets desk, where Thabiso Lehoko is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks, Thami, and good afternoon. $1 in South Africa will cost you 17 Rand 6. In Botswana, it's at 13.66. In Namibia, 17 Namibian dollars 6. And in Zambia, it's trading at 22.44 to the dollar. In Kenya, the dollar is trading at 128 shilling 2. In Ethiopia, 155 per 704. Uganda, 3,000 shilling 549. And in Tanzania, it is trading at 2,000 shilling 440. $1 in Nigeria is trading at 1,440 naira. In Egypt, it's at 47 Egyptian pound 15. Tunisia, 2 dinar 947, and in Algeria it is trading at 129 dinar 22. The Moroccan dirham is trading at 938 to the dollar. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is at 2,173 to the dollar. A look at commodities markets now. Gold is trading at $4,071. Platinum, $1,548 per ounce. Brent crude oil is at $64.64 a barrel. For any business stories you would like to share with us, please send us an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business in Johannesburg, I'm Thabiso Lehoko.
Business news on Channel Africa. The African perspective.
And taking us to 4:32 from the sporting desk with the business of sport, a very good afternoon to you, Figile Lingwati.
Sports on Channel Africa. The African perspective.
Good afternoon, Thami. Let's kick off with football news in our business of sport. South African Minister of Sports, Katie McKenzie's senior advisor, Charles Cilliers, insists the public internet version of the VAR offered by Quality Media Production is best suited for South African conditions. One of the key questions now is how much this project will cost following the ministry's earlier announcement of an allocation of $5 million. However, recent discussions have centered on the $1.1 million allocated by Treasury for this fiscal year. Sealers has also consistently maintained the view that this is a project that could potentially pay for itself, given the commercial elements that VAR could bring.
I think that it's fair to say that we're not clear on what it is going to cost, because there's a wide range of estimates around the solution that you go for. So right now this has been a fact-finding exercise, but we do believe that we're going to have the kind of money that we need to get this up and running by the start of the next season, and to also stress test it and use it in cup games as early as May.
Celias says with the money they have, which they know is not a lot, but they are hopeful that money will be available.
For us, we feel the money will be there, and we also believe that there's commercial opportunities with VAR, right? Because everybody watches the decision. So we know that brands are going to want to see their names there. So we feel the sponsorship for VAR will not be hard to get. VAR could even be profitable, right, if we do it properly. So we believe that we as government must just be the catalyst to get it going, and it'll become sustainable. We are fully confident of that, and we do have the best league in Africa, but we can't keep going without VAR, right? This is the future, we can't escape it, and we're going to have to do it sooner or later, so why not do it now? I think I was always taught, do now, don't postpone to tomorrow, do it now.
Minister Mackenzie says there's been a lot of progress in the push for the introduction of the video assistant referee in the country, and the Treasury has approved finances to kickstart the process.
We are proud to be working hand in hand with SAFA, FIFA and CAS and bring VAR to our leagues and to set a benchmark for the rest of Africa. Treasury has approved initial spend of more than 20 million in this financial year, and we are confident that we will face VAR in using a sustainable, affordable approach that will see all our big games supported by VAR. And South Africans can already look forward to seeing VAR on the screens as we test and prove the solution that has been chosen.
On to tennis news, Jannik Sinner and Carlos Alcaraz completed their years of dominance in men's tennis by contesting the final big match of the season, and now their lavish final prize money totals for 2025 can be revealed. Sinner won a massive $5 million by remaining undefeated at the ATP Finals, winning all 5 matches to extend his unbeaten run in the competition to 10 matches. He has now also extended his unbeaten record indoors to a staggering 31 matches. 2025 ATP Finals singles prize money for participation, all players received $331,000. Round-robin win, $396,000. Semi-finalist winners received $1.1 million. And the winner in the final is $2 million. Let's end with golf news. Adam Schenk battled through the blustery conditions of winter in the final round to capture the Bermuda Championship for his first USPGA Tour title. The Butterfield Bermuda Championship offered a $6 million purse, with $1.8 million going to winner Adam Schenk. In all of this playing career till now, the total prize money accumulated by Schenk amounts to whopping $4.7 million. Additionally, while he won his first PGA Tour in 2025, Schenk's best year came in 2018-2019 when he earned a total of $1.2 million. Japan's Takumi Kanaya shared his third on $274 and himself $800,000 with American Max McGreevy, Vince Whaley, Alex Smalley and Frank Capan III, also amassing $800,000. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Fidel Ngwati.
Sports on Channel Africa. The African perspective.
It is exactly 4:37 Central African time. Thank you to Figile Lingwati and Tabiso Lihoko. Now, South Africa and the United Kingdom are set to host the 8th Global Fund Replenishment Conference. The summit will be held in a hybrid format on the margins of the G20 Leaders Summit This comes as the Global Fund faces a potential $8 billion shortfall against its $18 billion target. The Global Fund Replenishment Conference aims to accelerate the fight to end AIDS, TB and malaria, to strengthen resilient and sustainable health systems, as well as build a healthier, safer future for all. For more on this, we're joined on the line by Sherwin Charles, co-founder and CEO of Goodbye Malaria. A very good afternoon to you. Great to have you with us on African Business. Welcome.
Thank you very much, Thami.
So let's start first by focusing on Goodbye Malaria. How does your commitment to the Global Fund reflect the role that African private sector organizations can and perhaps should be playing in global health financing?
Yeah, our commitment, Tommy, started back in 2016 when back then we realized how awful malaria is on the continent, still being the biggest killer of young children under the age of 5. And at the time, we knew that it was important for African private sector and African leadership to stand up and be counted. And so we committed to our to $4 million to the Global Fund as part of a leverage of a grant that would be co-funded by the Global Fund, as well as the Bill and Melinda Gates Foundation at the time. And leveraging what we had put on the table allowed us to start with a grant in excess of $20 million. So it was wonderful to be in a partnership that allowed us, as African leaders, to showcase that we could implement malaria interventions across the border. So it covers Mozambique, Eswatini, and South Africa. And having a regional approach helped us align policies between countries and helped us have immense impact.
Looking back now at the impact that these millions of dollars have actually had on the fight against malaria, how would you rate your success? Has there been significant change, not only in the reduction of malaria deaths, but also perhaps in policy that needs to change?
Absolutely. I think the impact, as you said, is not only on the number of cases or number of deaths from malaria, but it's also in the improvement in the quality of life in southern Mozambique and Eswatini and eastern parts of South Africa. We've also seen an increase in community GDPs within that region. But one of the most telling facts is that the hospitals where we work, particularly in Matola, 70% of the beds in the hospital were taken up by malaria cases. Today, you would struggle to see 5% of the beds being taken up. And really, that's allowed the health system to deal with all of the other ailments, particularly maternal health care, within those communities, rather than the beds being taken up just by malaria.
So looking at the shortfall here, you face a potential $8 billion shortfall. What does this mean for malaria elimination on the continent, and how can Africa lead and take the lead towards finding those solutions?
Thami, I think firstly, I hope you're wrong. I hope that we do much better than that in the replenishment on Friday. We still have 3 more days to change that storyline. And I'm hoping we get to much more than $10 billion that we would raise. At those levels, malaria elimination is set back. We not only will not get to meet our targets, but we're also at risk of losing all the gains that we have made in the last 20 years. Malaria is a disease that, if not addressed timeously, it comes back with a vengeance. The mosquito populations flourish transmission increases, and you see an immediate rise in the number of cases as well as the number of deaths. And so this is something we've got to fight against. This is something we've got to stand up. And one of the ways in which we can achieve that is by ensuring that we have more domestic resources to put to the fight against malaria. We've got to be smarter. We've got to bring innovation and new tools to bear. We've got to do better in our implementation and ensure that we're getting value for money. But it's a big task on our communities as aid across many diseases and many interventions have been cut by the global north.
And what are your expectations for the 8th Global Fund Replenishment Conference? You were saying that you really hope that this $8 billion dollars is not the price tag of the shortfall. How are you going to bridge that gap through this particular conference?
I think with a few strategies. One is that the fundraising just does not stop on the 21st of November. We really have to continue to bring other countries, new donors, and maybe seek top-ups from existing donors. What we've seen is from the G7 countries that aid budgets have been cut and there's been an increase of spending in defense. I'm hoping that we can still showcase what a great investment the Global Fund is. We've saved 70 million lives to date since inception of the Global Fund. We've seen life expectancy in so many of our African countries increase, some by as many as 20 years from the work that has been done and catalyzed by the Global Fund. So we can't give up now, and we can't look at this and think that we have no hope. I think what is so encouraging to see is how African leadership is stepping up to the plate. We just heard that Uganda had pledged $3 million. We know that our own country is leading from the front, and that they're mobilizing resources to show that African countries can transition and do have access to domestic resources. Of course, one of the things that needs to be addressed, which the G20 is tackling, is to ensure that there's debt restructure for the African countries at this point in time.
You mentioned earlier that you work in the Mosaswa region, that Goodbye Malaria works across Mozambique, South Africa, Eswatini. What have you found to be the biggest challenges in coordinating cross-border malaria elimination efforts?
I think that because we've been at this for so long, that we've really got an efficient mechanism for countries to align policies, align timing of interventions, and ensuring that they collaborate in the fight against malaria. But our biggest challenge is really to ensure that our communities believe that they don't have to live with this terrible disease. Part of the strategy is behavior change, and really saying to communities where people can afford it, that they protect themselves and they reduce transmission by protecting themselves from mosquitoes.
Over and above the fight against malaria, there's also the big question of funding post the G20. What do you believe South Africa's leadership role is in shaping the next phase of global health funding? And this is under the G20 agenda.
Yeah, I think we got to show that there are elements around public health that need to be put in place that really will help us make the transition and have it done in a sustainable way. Some of the topics that are on the table is local manufacturing, having a regularized regulatory system that all countries subscribe to, finding efficient ways to bring new products to market, quicker, more efficient regulatory approvals, ensuring that the new tools are supported and are market shaped so that they become affordable and we can scale them up very, very quickly. I think that as a sub-Saharan region, where malaria thrives, is us coming together and ensuring that we work as one block in solving the problem. And it can be done. We've seen countries in North Africa that have been declared malaria-free. I think below the equator, we definitely can do it as well. And we have districts in Eswatini, southern Mozambique, South Africa, that can definitely get over the line in the next 3 to 5 years.
Well, Sherwin Charles, we certainly wish you all of the best for the 8th Global Fund Replenishment Concert taking place on the sidelines of the G20 Leaders Summit. Thank you for your time. Sherwin Charles, their co-founder and CEO of Goodbye Malaria. He takes us to exactly 4:48.
Darubini ya Afrika na I am Henry Shakif.
Deogratus Bwire, wewe kama mkurugenzi wa shirika la kutetea haki za binadamu kutoka kule Dar es Salaam, Tanzania. Maandamano yameendelea kwa siku ya pili. Nini kinaendelea?
Kwanza mimi ningependa tusiliweke kama wafuasi wa upinzani. Kwa sababu kiukweli mimi nilipata kidogo kushuhudia watu waliokuwa wanapita barabarani hawakuwa kwa namna yoyote ile wamebeba bendera ya chama chochote cha upinzani.
Umezungumzia swala zima vitu ambavyo havijakaa sawa vinapaswa kurekebishwa. Vitu hivyo ni nini?
Hiyo vitu ambavyo havijakaa sawa tayari nimeshavisema huko. Najua kumekuwepo na mtiririko wa matukio mengi sana. Watu ambao wanakuwa wanapinga masuala kadha wa kadha ambayo yanaonekana kufanywa na vyombo vya dola kwenye mitandao au hata pia nje wamekuwa wakichukuliwa hatua.
Darubini ya Afrika kila Jumatatu hadi Ijumaa kuanzia saa 11 kamili hadi saa 12 kamili jioni majira ya Afrika ya Kati.
Global leaders, African insights. Follow the G20 summit with Channel Africa as it happens.
And standing by as we usher in Vue d'Afrique, you say bonjour to you, Joël.
Bonjour Thami, bonjour à tous les auditeurs. Alors sur Vue d'Afrique, dans quelques minutes, il sera question de plusieurs pays et organisations qui saluent la signature d'un accord cadre pour une paix globale dans l'est de la RDC. Et nous parlerons également des réactions contrastées au Bénin après l'adoption d'une nouvelle réforme constitutionnelle, mais aussi de l'ONU qui tire la sonnette d'alarme sur le Kordofan qui ne doit pas devenir le nouveau Darfour au Soudan. C'est tout à l'heure sur Vue d'Afrique. Merci Thami.
Merci beaucoup. That's Joël coming up in just a moment with Vue d'Afrique.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. Channel Africa, the African perspective.
Now, a video of a Chinese national assaulting a Kenyan worker at a Nairobi roofing company has ignited public outrage and calls for deportation. The incident has once again raised concerns about mistreatment of Kenyan workers by some foreign employers. From Nairobi, here is Channel Africa's Daniel Ominde with the details.
A Chinese national is facing deportation from Kenya after a video of him assaulting a Kenyan co-worker surfaced online. In the video that has sparked mass public outrage, the Chinese national is seen raining blows and kicks on a seemingly restrained co-worker at a roofing products company in Kenya. The Kenyan trade union's umbrella body KOTU has since demanded for the immediate deportation of the said Chinese national and has extended similar demands on what they call other rogue Chinese investors in the country. The incidents, which has led to massive public outrage, brings to the fore increasing cases of workplace harassment reported in Kenya. In 2018, a Chinese national was deported from the country after being recorded making racist slurs against Kenyans. In subsequent years, we have also seen several viral clips showing individual Chinese supervisors physically or verbally abusing Kenyan workers at construction sites or even factories. TCM Roofing Mabati, the employer of the Chinese national at the center of the current case, has since issued a statement saying that the worker has been sacked and that plans are underway to send him back to China. as at the time of going to press, there was no indication of any other action taken by local authorities. Earlier on, I spoke to former Law Society of Kenya President Isaac Okero, who observed that forcing employees to work in an unconducive environment could be interpreted to subjecting those employees to forced labor according to Kenyan law. Here's what he had to say.
This means that all employers, including foreign investors, must recognize that their employees have inherent dignity under Article 28 and the protection thereof, that they are not required to perform forced labor, and that they have a right to reasonable working conditions. In fact, under Rule 3 of the Employment General Rules, an employer subjecting an employee to working under undue threat may be deemed to be subjecting him to forced labor.
The Chinese embassy in Kenya has also posted a statement on their X account saying that they were extremely disappointed to see such an incident occur. They also added that the embassy consistently requires Chinese citizens in Kenya to strictly abide by local laws, regulations, and cultural customs, and that the vast majority of them do so. The statement continues, "We believe this isolated incident should not affect investment cooperation between Chinese and Kenyan companies, but it is a reminder to all Chinese citizens in Kenya to uphold the principle of mutual respect to Kenyan friends and behave in accordance to the laws and regulations and cultural customs of Kenya." That just shows there the Chinese embassy trying to move in and forestall any diplomatic tensions that may arise between the two countries as a result of these increasing cases being reported of Chinese employers or even employees working for Chinese companies mistreating their Kenyan counterparts. Daniel Omide, reporting for Channel Africa from Nairobi.
From Nairobi to the latest as far as the markets are concerned in South Africa, look at the economy there. And in this week's slot with First National Bank, we'll be taking a look at the Finance Minister Enoch Godongwana's midterm budget last week. We'll also take a look at October's inflation data that's been released a little bit later on this week around Wednesday, and also what to expect from retail sales. And for this conversation, we're joined by FNB senior economist Koketso Mano. A very good afternoon to you, Koketso. Good to have you with us. So last week we saw the Finance Minister table the midterm budget. What was the key takeaway?
It was a good budget. I think that's one place to start. It was well received by the markets. I think us as economists are also encouraged by the fiscal consolidation that is reflected in that budget. There's other things that the budget managed to show us, right, is there's still quite a good consensus around structural reform. So we see that coming through strongly in the budget. It's also about, state capacity, right, recapacitating the state. And that's something that is going to be good for our institutions going forward. So it was a very good budget from that sense. We saw a revenue overrun, which also speaks to SARS efficiencies. So that's something that we hope will continue to build a strong base for revenue collection going forward, or revenue mobilization. We did see, for example, that the inflation target was taken on or formally backed by the minister. So we're now working with a 3% inflation target with a 1 percentage points tolerance band to allow for economic shocks. But either way, what that inflation target shift really does for the fiscal matrices is that while in the near term it does speak to lower nominal GDP growth, so unfortunately it does weigh on revenue collections, it does weigh on a few of those fiscal matrices. But going forward, the hope is that you see the growth in expenditure slowing in line with lower inflation. What you should also see from a borrowing point of view is that a lower risk, lower inflation-linked bond spending, for example, less pressure when it comes to foreign exchange borrowing, for example. All of that should speak to, a lower interest rate bill when it comes to borrowing from the government, by the government rather. So on the net, what you should see is that also creates some stability in terms of debt. So we see debt stabilizing over the medium-term expenditure framework. And all in all, Thami, that's all going to be positive for sustainability in South Africa's fiscal matrices, but also economic growth.
Let's project into Wednesday now. We are expecting October's inflation data to be released. If we look at the data for September, it did increase slightly. What should we be expecting for October?
Unfortunately, we see another increase in October. So we saw that slight uptick to 3.4% in September. So October, we see another uptick to 3.7%. It still remains within the new target band. So that's something that's still positive. But it will be very interesting to see how the MPC internalizes the outcome that we get on Wednesday in terms of their outlook for not only inflation, but monetary policy as well. But either way, what you should see in that number is mostly which is something that we've been flagging for quite some time. In the second half of this year, you would have less positive base effects that are supporting the numbers downward, right? So that's starting to come out of the system, and that's why we're seeing that this uptick in inflation is necessarily going to be there's strong demand in the economy, and so core inflation is rising rapidly. It won't be a story around, fuel prices becoming less supportive in the economy. So hopefully we still see the supply side of the economy still being positive from that point of view. But on the net, you should see the headline numbers rising because of this fading positive base effect.
All right, we're going to get through this really, really quickly. Wednesday is another big day. Retail sales also being released. Are we going to be seeing continued growth, do you think, for September?
We do think we will probably still see continued growth, but you remember in the previous numbers, we did see a deceleration in that growth. It speaks to less liquidity injections, but we still think lower inflation, higher real incomes, less restrictive monetary policy still upholds retail sales growth.
Koketso Mano, always a pleasure. We look forward to Wednesday and seeing if your predictions are on point. Thank you so much.
Thanks, Amy.
Have a great one. That's Koketso Mano, FNB senior economist. She takes us to exactly 4:59 Central African time. Thank you. Have a great one. And that's how we as Africa in Business bid you farewell for this afternoon. Restez connectés as we make way for Vue d'Afrique. Au revoir.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest in